All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Just adjusting my microphone here. I never get this thing positioned right. All right, cool. All right, so again, welcome to my stream. If you're new here, let me quickly explain how this works. So the first thing I'm going to do is I'm going to go over the economic calendar. Then I'm going to go over the Bitcoin situation here, which is very interesting. And then, of course, I'll cover some questions from people, members of the community and stuff like that. All right, by the way, I am simulcasting here on TradingView. Let me see what's going on over there. Let me just refresh that. If you're watching me on TradingView and you can't see me, make sure to press the refresh button on your browser, and that should solve the problem. By the way, my numbers have been very low on TradingView, so I'm wondering maybe my content is irrelevant, or maybe there's just less interest in the space. I don't know which it is. But anyway, I've been noticing that for a little while now. I do plan to produce more content soon. Okay, what the reason why I'm not doing that right now is because we're working on a new website. All right, and the purpose of the new website actually is to bring the trade scanner signals. We're creating the ability to send the signals straight to your email. All right, you can thank Steen for that. He's been helping me out enormously in that area, but it's a project that we have to complete before I can start producing more content. But I certainly am interested in producing more, articles and streams and things like that. So it's all coming soon. All right. And once we have that website up, don't worry, you'll all know about it. So anyway, with that being said, let's get this thing started. All right. So hold on a second. Let me just put this up. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Hey, Steen, I see him on TradingView. He's the only one over there on TradingView. All right, cool. May get the conversation started over there. Anyway, so just a quick hello to some of my regulars. We got Alice here. We got Steen, of course. And we have Vad. Hey, Vad, good to see you. All right. So again, we're going to go over these things. One thing I want to mention too, if you're new to this space and you're looking for an exchange or you're looking for a broker to trade coins or altcoins, whatever, consider the links in the description. We have Bybit and we have MEXC. If you deposit funds, you open an account and you actually place trades, Steen will get a small cut. He'll get a small commission for those trades. And those small commissions go a long way for helping our community to have a better experience. He's been taking care of all the technology, and that's why we have a trade scanner that basically tells you where the stop losses are, tells you where to take profits should be, and we have more improvements on the way. Okay, so just to kind of give you a quick idea, this situation, right, with the trade scanner, before I talk about this chart, and I will make this chart bigger here, there were a number of shorts that were called in some of these altcoins in the recent couple of days. I haven't checked yet, but most likely those alts are stopped out. All right. Now I've explained this numerous times to people. If it calls one coin like Matic or DOT or one of those, if it calls it short, it's going to call the other ones short as well. And you wouldn't take all of those trades, right? You'd only take one, because if you take all of them, it's all the same trade. So that would not make sense, right? I mean, instead of taking 3 or 4 coins going the same way, you would just add to one of them, right? You just take a bigger position. It's the same idea. So if one stops out, they all stop out. So that's not 4 losing trades. That's 1 losing trade because it's all on the same side. That's the way these things work. All right. So important to understand. But also, I want to mention that sometimes the trade scanner will call these low momentum signals, right? And those are the ones that have a greater chance of stopping out. Well, I've figured out a very effective filter for that. So once we implement that filter, we're going to see a lot less of those low momentum signals, right? Which is a great thing. I mean, I believe we can cut that by like 50% in some cases, while letting the higher probability trades, while letting them get through, right? So that's going to be an important update, and it's coming. We just have to get the website done first. Anyway, all right, so just those are some quick announcements. All right, let's get into the economic calendar, shall we? And then I'll make this chart bigger here. So You can check the economic calendar here on TradingView, or you can check any other economic calendar. There's really nothing going on this week. There are a couple of things. All right. Tomorrow, which is Tuesday, we have the U.S. retail sales. But besides that, we have like British or UK unemployment. And I saw something from China in there. And then I saw that for the UK, we also had their CPI. I think that was on Wednesday. Those are not market moving reports, right? So even retail sales for the US is not really a big market mover. So I wouldn't really worry about those reports this week. So taking swing trades, taking day trades going into those reports really shouldn't be a big deal. Of course, there can always be a surprise, but generally speaking, those are not major reports. The major ones are non-farm payrolls, anything that has to do with the FOMC, or any testimonies from Chairman Powell, pretty much, right? That's all that really matters in terms of dollar movement. All right, so that's the economic calendar. Now let's make my chart bigger now, and let's talk about this Bitcoin situation. All right, so let me put this over here. There we go. So now you can see my chart. Now, if you read my TradingView article that I wrote on Saturday, I talked about a short signal confirmation at 26,500. Now, let me ask you guys, has 26,500, was it taken out here? Let's see, right? Saturday was like around over here somewhere here. Let's see this here. That is, no, right? 26.8. I see lows of 26.855, right? No 26.5. So what does that tell you? There was no short signal, all right? Now, you can see the squiggle that I have drawn on my chart here. As you can see, I was expecting or anticipating a bearish movement, right? Based on the structure, based on the levels, and that is not what the market delivered. So one of the points of the article was the market is random, right? And the whole point of looking at a chart is not to forecast where the market is going. It's really just to get context so that we could focus in on a narrow set of scenarios, right? So this was my scenario. Hey, Han, from Belgian-Dutch border. Maybe you could say hello to Steen. I don't know if Steen is on the Belgian-Dutch border, but I know he's somewhere around there. All right, cool. Hey, Paige, good to see you guys. So anyway, so what I'm saying here is, right, that signal never went off. Hey, Sean, how are you? 5 minute behind in the stream. Okay, no problem. From Pacific Northwest. Good to see you. Sean's been active in the stock, using the stock scanner, which is nice. And again, all those improvements are coming, right? When we have that filter is going to be applied to all of the scanners. Anyway, so let's talk about this situation. Now, I don't pay attention to news, as you guys know. So obviously, some news came out, right? Maybe if someone wants to share, if someone knows, because again, I pay no attention to news. I don't chase news. I don't get involved in that because news is nonsense, in my opinion. News is after the fact. I want to be able to anticipate. Now, could I have anticipated a move like this? No. All right. I was looking basically at a short continuation pattern, which we never got. Okay. So this stresses the importance of having a set of rules to minimize yourself from the equation. If you were emotional, right, and you were just following what you saw, you may have gotten short thinking, okay, yeah, this thing's a short. Yeah. Or on the other side of the argument, you could have said, well, how could this have been a short when you were at a support level? Was that a support level? Well, this was a minor support level. This area right here, I would constitute that or categorize that as a minor support. This was not a major support. In fact, this was basically in the middle of the range from this low to this high. Well, actually, we're not going to count that new move. We'll just count this move because that was the move previous, right? This move hadn't existed yet. So this support here was basically in the middle of that range. The range was 25K to basically 28K or 28.5. So this would be a very, very hard support to justify on a swing trade time frame. Does that make sense? After the fact, of course, we could say, oh yeah, it was a support. But before the fact, before we got this movement right here, you know, I'm gonna erase this thing because we don't need this right now, right? This is no longer relevant. This scenario is no longer in play. There was no way to know that this was coming. So on a day trade time frame, this support would have been relevant. If you were working as a day trader, you could say, okay, there's a possible support there. There were some inside bars. You could have used the inside bar high breakout as a potential buy signal for a day trade. I would not have taken that as a swing trade. All right. Anyway, so now what we have here is this short squeeze, which is what that is. All right. Now let's see what people are saying. Paige says, oh wait, it was a fake breakout iShares spot ETF approval. Ah, okay. Hey, Armand, good to see you. So Steen is on the Belgian-French border. Oh, by the way, people, if you want to share what country or what city you're from, that's always a cool, fun fact. I'm streaming from the greater New York City area, in case you haven't realized by the way I talk. All right, so the fake breakout iShares spot ETF approval news. It was supposed to. Okay, right. I've heard. I just watched a video about that ETF. But it was fake news for anyone. I was just about to enter my short when. Oh, interesting. Okay. So that's interesting. Fake news, and we still got this move, huh? Well, I'll tell you what. If that's true, if that was some kind of fake out, or maybe they were interpreting the news as it's going to be approved. There's a better chance it's going to be approved, so maybe that's why people piled in. I don't know, but I could tell you one thing. News aside, because I never factor news into these things, this tells me there were a lot of shorts. All right, and it makes sense that there were a lot of shorts coming off of this resistance, right? And the structure also supported the short scenario. So it makes sense. Now they get squeezed and you get this, right? Now, notice the pin bar, okay? Notice that. You guys see that? Notice that, because that's also very telling. It stopped at 29.9 and turned right around and basically has developed this pin bar. So that tells me that this is not really sustainable. This definitely a red flag. Like, I don't want to see a long tail like that on a bullish candle. That means that people are now caught. Whoever bought into this, whatever inexperienced, mindless sheep bought into that, I don't know what to tell you, okay? Because that is definitely a bad place to be buying. So for so many reasons. Another thing, let me ask you guys a quick question. As a result of this move, how many of you believe that Bitcoin is now on its way to 50K? So the next couple of months, how many of you believe? And don't be embarrassed if you agree, if you believe that. But I'm just curious. How many of you now believe that because of this move, this is a sign that Bitcoin is likely to be working its way toward 50K over the next couple of months? Anyone want to believe that? Look at the 1 hour pin bar. Oh yeah, I know, it's even bigger, Roger. It's even bigger on the smaller time frame. So if I pull this up like on a 4 hour chart, for example, I mean, it's a massive pin bar. Look at that. I mean, that's a lot of people are caught in that, right? But it's the same idea on the daily time frame. It just looks smaller, obviously, because the data is consolidated. Paige, I think it's a great short zone. Okay. No 50K yet. Okay. So you guys aren't getting caught. Bill says bearish. USA government selling Bitcoin potential. Okay. So you guys aren't buying it. Bonds don't support. Man, I need to subscribe to you guys. You know what? You guys know better than me. No, it's true. You guys are on the right track. You know, I'm glad that I've opened your eyes to the nonsense out there. You guys are we're all on the same page here. So this is most likely a fake. What my point that I was going to make about that is this: as long as Bitcoin refuses to take out 30K, right? As long as it fails to take that out, we're not going to see 50K. All right. First of all, from a technical point of view, because that's the range high, right? This movement here, this is not a range high. This is just all nonsense in here. This is just overlap, right? All that nonsense in there. So breaking supports and resistances in there, while they can be relevant for day trades, they are not relevant for swing trades. Does that make sense? Make sure that you comprehend that, because that's a very important fact that you must internalize. Support and resistance levels carry weight. There are heavy ones and there are light ones, or you could say there are major ones and there are minor ones. Major and minor, major ones are going to be more important for like swing trades. Okay, like this is a major support area here. This is a major resistance area over here. Everything in between is minor. So all this stuff inside is minor. If it breaks, okay, you may get a run for a day trade, right? Something like that. But not very significant on the bigger picture. Plus, we also have to look at the macro view, checking things like the bond market and stuff like that, which I haven't even looked at yet. But that's exactly right, Alex. So no problem, Isaac, no problem. I think macro looks bad, but spot ETF narrative is real. I think we get another flush. Okay, right. So I just saw some stuff about that. That ETF, by the way, right? If that actually comes out, they're saying it's going to come out because Gary Gensler just can't get his act together, and he tried to beat those. He tried to beat that, right? But the I guess the courts or whatever, they're not going for his argument, right? He's a chairman of the SEC, so these get through. It's definitely a positive for. I believe it's a positive for this space because now it allows regular investors to buy shares like a stock, okay, or whatever. Like it's going to create more demand, basically, right? Without getting into all the technical details, it's going to create more demand. Plus, we have the halving, whatever you want to say, however you want to call it, coming in April, right? And that's going to also basically reduce the supply available. So obviously, prices are likely to be pressured to go higher if you think of it logically. Now, as we all know, as you should know, markets don't operate on logic. They operate irrationally. They operate generally on perceptions of the future, right? So while those are good things, those are good foundational things for Bitcoin to be at a higher price in the future, it doesn't mean that Bitcoin will be at a higher price in the near future. We still have to deal with expensive money or cheap money, interest rates. That's the real factor. And a lot of people just completely forget that idea. If we don't have lower rates, Bitcoin and the altcoins are still going to struggle. They're not going to go anywhere because we need cheap money. We need cheap money. And cheap money begins with the bonds, with the interest rates. And who controls that or has a big effect on that? As we know, the Federal Reserve. Now, I just saw some commentary that the Federal Reserve will likely be forced to lower rates next year when we have some recessionary whatever, right? When things look really ugly, that's usually what prompts the Fed to lay off the interest rates or to start reducing so that we start stimulating again. But so far, the Fed has done nothing, right? And we see rates have continued to go higher, and they're in very uncomfortable areas for a lot of people. All right, so that's what do you think will happen? Price action. Well, when the ETFs come out, like I said, it'll increase demand. It'll build a good foundation. But I don't think just because there's an approval, Bitcoin's not going to instantly spike to 50K. It's just not going to happen. All right, because we still don't have cheap money. Like I said, we need that money. We need cheap money. So we need lower rates. Now, if rates are coming off, and the Fed is coming out and saying things like, well, we're going to have to cut rates or we're going to have to pause. And they start with that kind of talk. Then you will see the rally in the bond prices first. When bond prices rally first and they sustain that rally, then I would be more optimistic about Bitcoin. But we just don't have that yet. All right, let me just take a quick look here. Bond market. All right, ZN. Let's take a quick look. What is the bond market doing? Does this look bullish to you? I hope not. All right, this does not look good. So bond yields, US 10Y, okay? Bond yields are bullish. As long as this chart stays like this and we have a higher high and we continue to push, Bitcoin, I don't care how many ETFs come out, Bitcoin's not going anywhere, okay? In that scenario, chances are it's not going anywhere. That's what you need to realize. That is a very big piece of the puzzle that people quickly forget about. Hope is such a bad thing in this game. And I see video after video that basically instills hope. Oh, don't worry, it'll go. It may take 5 years, but just invest, just keep buying. It's like, hey man, you need to time it. If you want to optimally invest your money or trade, right, in an optimal way, you need to be aware of where we are in the business cycle and what's likely to happen as a result of the business cycle, not the chart of Bitcoin by itself. Does that make sense? Let me see what people are saying on TradingView here. I see some conversation over here. By the way, TradingView people, I hope you read my article. I got like really bad numbers on that article. Like I said, it's either me and I'm just the stuff I'm writing is irrelevant, or there's just no interest. Maybe I'm writing about the wrong stuff. Okay, let's see. Hey, Matos, how are you? Not even for okay. So they're not buying it there either. All right. Right. Exactly. Well, inverse head and shoulders on the 10-year note doesn't mean anything. It doesn't mean anything. I believe ETF news will be worst news for the market. All right. Well, buy the rumors, sell the news is a thing as well. Please check Bitcoin one after announcing BTC in Chicago stock market. Oh, okay. Well, that's if you're talking about the original Bitcoin ETF. That's you can't compare that. You can't compare that because first of all, that was a few years ago, and that was tied to the Bitcoin cycle of that time, right? So new ETFs are going to bring demand. I mean, I don't think there's any way around that. New ETFs, they're going to come out with an Ethereum one too, I understand, and that brings these things, that brings these instruments to regular investors. It also allows other types of institutions to invest in them, which they couldn't or they wouldn't before, right? And now they will when they have these vehicles available to them. So I think that argument is valid, where it will increase the demand. But I don't think it's going to have a short-term effect of anything. I just don't see it. We just don't have the macroeconomic puzzle pieces in place. They're just not there. All right. So we get some more recessionary type situations happening, right? With we'll see the effects in the S&P, right, and the Nasdaq, and it'll probably carry over into here. I don't buy this for a second, right? So now let me talk about this real quick. Bill says also dependent on global, right? We saw 3K candle today on fake news. I think genuine news. Well, sure, it can, but the thing is, it's not. If we don't have the sustainable environment, then I just don't see this thing continuing, right? Because we just don't have the money. Where's the money going to come from? People are just going to, I'm just going to buy Bitcoin because someone told me to on YouTube, right? That's that with the money. If we don't have cheap money, it's not happening. All right. These are highly speculative. Now, let me point this out because, I talked about the next setups. First of all, let me just talk about this from the trade scanner perspective or the bot perspective, right? By the way, we do have this thing called Trade of the Week. It's the trade scanner, but it gives one trade out a week. You can get that in the Discord community. Just go to the link in the description. It's free, and there's a channel in there called Trade of the Week. One trade comes out each week. So check that out if you're interested in seeing how it works. It gives you an entry, a stop, and a target, just like the real trade scanner, except it only picks one instrument per week, okay? So check that out. Now, I mentioned that because after a move like this, okay, the trade scanner, which usually looks at smaller time frames, is now going to interpret the short-term trend as bullish, right? So if it interprets it as bullish, that means it's going to be looking for longs. But is it going to be looking for longs like right now? No. What it's going to wait for, what it's going to look for is some sort of consolidation. So let me lay out this scenario for you. There are two scenarios that you need to watch out for, okay? The first one, I'm going to give you the bearish one first, and then I'm going to give you the bullish one. The bearish one is this. If this thing gives it back, right, over the next day, and we get a red candle that looks something like that, all right, it basically just gives this entire move back, then that means that a lot of people are long and caught. That's what that means. And if we see something like this, chances are this support is going to break, okay? And then you'll see 25K tested. That's one scenario. Again, this needs to give it back like in one candle. A couple of little candles don't count. A couple of little red candles mean nothing. If you get one large daily candle and it gives the entire move back, and we're pushing like 26.5 by tomorrow or whatever, tomorrow, the next day, then this move was a complete fake. That's the signal. That's the tell right there, okay? Then at that point, I would anticipate the test of 25K. In that scenario, if we get a sharp movement like that, the bot is not going to be able to catch something like that because it needs to basically make a move and then retrace and then make the next move. That's what the bot looks for. Retracements, right? Not these binary moves where 1 minute it's bearish and then straight up and then this noisy random stuff. All right, anyway, so that's one scenario. You guys get that? So now, if we don't get that, I'm not saying that that's going to happen. We're saying if it happens. Like I said, we use charts to get context, not to make forecasts. So the bullish scenario would be we pull back a bit, right? And we start to develop inside bars. Okay, maybe we develop a few inside bars. Basically, the inside bars stay inside of this range. Okay, if we get a few of those, then we get a breakout of an inside bar high. Let's say maybe by Thursday or Friday, we get like a breakout of an inside bar high. That's the long signal. Now, does the long signal follow through? I don't know. This structure right here is bullish. We have higher lows and we have a higher high. Okay, so that little mini structure is bullish. But how far does that next move go? I don't know. If we get the breakout, maybe we get a test of that 30K again. Okay, maybe not in one candle, but we get that test of 30K, something like that. And that this is where your take profit zone should be. Okay, up in that area. That's the bullish scenario. Expecting more than that, you're asking for trouble. Because again, we don't have a sustainable environment. Now we are going into what looks like the Santa rally. If we take a look at things like the S&P, okay, or let's take a look at the Nasdaq, because the Nasdaq is usually ridiculous, right? It's only 100 stocks, the Nasdaq 100. Look at this. The Nasdaq has never, after that rally that we had, the AI rally back in the summertime, and once it basically gave up in August, pretty much stopped. We've been in this consolidation ever since, right? This consolidation is a higher low consolidation, which is generally bullish, right? So we pull back into these lows, right? Maybe that may be a long, or we break out. Maybe we break out, we start pushing, we break out. There's potential here for breakout. It's hard for me to believe, especially in light of the bonds, but markets can be irrational. Okay, so if we break out, how far we can go, I don't know. I'm not like, again, I just, it's hard for me to believe because the bonds do put a filter on everything. If there's no money coming into this market, then what's going on here, right? So just something to keep in mind. We also have the quarterly reports coming out in a few weeks. The stock scanner has been showing lots of those, right? November. Okay, so what's going on over here? I'm just checking out TradingView here real quick. I see someone putting a chart. What is this? A competition? Oh, I got Miami CEO. It's been a while. Haven't seen you in a while. How are you? All right, Miami. I love Miami. Please, okay. I like your ideas on TV. Okay, cool. I appreciate that. Could this be a pump? I don't think so. Because Miami, what they're saying is there was some fake news on the Bitcoin ETF. Okay, our local top signals. Okay, I'm just looking through here. Could this be, all right, so I'm just reading. Curious your thoughts on technicals for both. To me, it looks like we keep making lower highs and lows. Well, it's hard to say. I mean, right now, this structure on Bitcoin is basically a short-term bullish structure. Let's go back to Bitcoin. It's short-term bullish, okay? But if we don't take out 30K, then it's really, the midterms trend is a consolidation. If you notice, right? These horizontal lines go back quite some time. That's the range. What happens inside that range, you can't really judge from a swing trade time frame. You really have to look at that from a day trade time frame if you're going to do anything with it. All right. I believe the full cycle BTC is finished. Okay. I guess we have a competing analyst here. No offense to you, but I believe the SPX will be okay. Yeah, you're putting charts. That means, you're trying to get attention. Please check it out. I want to know your idea. I just told you my idea. All right. Anyway, what are you going to do? All right. Let me move on here real quick. I'm only taking questions from customers. I mean, from members. Could you also check gold? All right. Sure, Isaac. He's a member. Let me just take a quick look. All right. Oil. Sure. All right, so you guys clear on Bitcoin? So I covered the two scenarios on Bitcoin, so you guys should pretty much have an idea of what to expect and how to adjust your expectations based on how the look that it gives us, right? Because remember, the charts are always a step behind. What you see is old news. So we need to always be able to anticipate what's coming. And a chart can help us in some ways. A chart is not perfect, just like there's no such thing as a perfect system. Although on YouTube, I see lots of people claiming that they have 100% win rates. There's no such thing. So keep in mind, we want to know levels. We want to know structure. And there's a couple of other things too that we can factor into this, but it doesn't get more complicated than that. We don't need oscillators, especially when it comes to trying to anticipate what's coming, because oscillators are backward looking. Now, so we're pretty much clear on that. Let me see. We had a question here about gold, and could you check gold contradictory? All right. So gold and oil. Here's the thing: you cannot apply logic to those markets. Never apply logic. These are emotional. Something like gold. Well, this was a reaction to the geopolitical situation that we recently saw, and you can't apply what's going on like with the dollar, because based on where the dollar has been and all that stuff, gold should be lower. But as you can see, gold squeezed because there obviously were a lot of shorts in gold. Do not apply logic. Do not. Instead, look at levels. Okay, look at levels. Look at your support. Look at your resistance, and start with that. This is basically your support and resistance. Go out to a weekly chart and take a look at this thing on a weekly chart. A higher low was established at that 1830 area low, and we just came off of it hard. It squeezed hard off of that low. This is not a place to be buying gold, all right? Because again, you have resistances all over the place here, right? So if you're going to get involved in gold, I would wait for pullbacks. The lower part, right, the 1830s, 1850s, obviously that's going to be an area to consider. This recent struggle movement in gold, right, this recent bearish movement, as you can see, is still inside this broader range. So we can't make long-term judgments when we are inside of a range, and we've been inside this range for years, right? So it's important to understand that, right? So that's why this is where swing trades shine, because you could say, all right, within this range, you can find your support and resistance levels, and you can determine what kind of trades you want to take for something like that without getting misled by dramatic short-term movements. Does that make sense? So that's where gold is. And whenever you're dealing with gold, look at the dollar index, okay? Dollar index, this thing is a reflection of bonds. All these markets are interconnected, right? So you could say, oh, but this is double top or lower high. This thing's bearish. There's nothing bearish about the dollar right now. We have a higher low established. Maybe we consolidate. As long as bond prices continue lower, it puts pressure on this to go higher. If this goes higher, gold does not have much potential, okay, based on this dollar. If dollar starts breaking supports, that's another story. Okay, so quick on oil, WTI USD. Okay, WTI, can I get the symbol right? USD. All right. So is this the right one? No, it's USD WTI, because that gives me the correct dollar format. All right. So oil, again, this result of geopolitical activity, right? Don't get too caught up in this. People apply logic, they overreact. Don't do that. Look at levels. And oil is tricky. Oil has always been tricky because there are so many factors that drive oil, right? This, by the way, energy is a pretty large component of the S&P. So we may see some strange rallies here and there and be like, I don't understand why the S&P is rallying. Well, this is like 12% of the S&P or something like that. Plus, there's some other strange things that are going on that are just, I don't even understand, right? If you heard about this ESG thing, I mean, I recently became more familiar with it, and that seems to be very strange to me. All right. That seems to basically be a way to control all of these things and really throw off any type of actual free market behaviors. I don't know. Maybe it's a conspiracy theory, but that's definitely something that's artificial. That's never existed. Something like that has never existed in the markets. So I don't know. That's very questionable, especially when it comes to that. That's really something you need to be more aware of as an investor. All right. Anyway, let me stop jumping to other tangents. So oil, right? You have a very similar situation to gold. It's testing this little high, this minor resistance, but your low on oil is what? $81, right? Your range low, and your range high is like $95. So as long as you're inside of this range, right, and you stay inside that range, that's a broader high or low, right? So it's generally bullish for oil, I'd say, but I wouldn't be buying this thing now. This is a daily chart, by the way. I wouldn't be buying oil now. If you're going to get involved in oil as a swing trade, then at least look for some sort of pullback, at least something like that right there would be an interesting area. $84, $85, something like that. I mean, this thing right now is what, 86, so $2 pullback is within reason. General trend, though, as you can see, is bullish, right? If we clear this support here, which is what, 81, we clear that, then that would actually establish this as a lower high, and then maybe we have some sort of change, right? Some sort of structural change to bearish or some other type of consolidation. Remember, markets don't just go from bullish to bearish. They can go from bullish to consolidation back to bullish, right? Or bearish to consolidation back to bearish. Just because we have a consolidation doesn't mean the market's reversing. Please keep that in mind, right? Especially with markets like this. These are like economic. This have to do with like the global economic situation can affect these things, right? So it's not just the chart. You have to realize that there are other factors that can affect the potential, just like interest rates, for example. All right, cool. Yeah, Sean, check that out. ESG, right? You'll find some interesting information about that. All right, so let me see here. It's risky though because it's a bullish chart. All right, can you take a look at Meta? All right, Alex, I'm not planning to short it. Well, all right, so look, something like Facebook, that's a market stock. And so if we take a look at Facebook real quick, yeah, it's a bullish chart, but right, so is the S&P, okay, or so is the Nasdaq. Look, here's the S&P. That's generally bullish, right? We had this interesting pullback, but higher low forming, right? Potential Santa rally situation. Optimism going into the next couple of months. That's a typical cycle around this time of year. It's a seasonal thing. So Meta is going to be affected by that. It's a stock. It's definitely relatively strong to the S&P because as we saw, the S&P had that steeper pullback and this has not. And it's basically flirting with its highs. So, if you're betting on breakouts and you're looking for some kind of strength, I mean, certainly this chart implies that. I'm not a big fan of this company, but this is it's not weak. I can't argue with it. Just because there's a double top doesn't mean it's bearish. All right, that double top can break. I mean, look at the structure here, right? The structure carries a lot of weight in that situation. Does that make sense? Okay, so all right, you guys, I'm talking too much as I normally do. So, all right, I want to leave you guys with this, with Bitcoin. So again, keep this in mind. Watch for this fake out. I mean, so far, the long tail is telling, but it doesn't guarantee everything. We have a conflicting situation as usual. We have a higher low and we have a higher high. So this little structure within the range is a bullish structure, but that does not mean or qualify us for a bull market. Understand the variation there. Watch for the bearish scenario, which would be just a complete reversal of this, giving it all back, which then if it does, that means a lot of people are caught and 25K becomes very likely. Or watch for the inside bars and the breakout higher for at least another test of high, right? I'd be looking for the other test of high in that scenario. And chances are the trade scanner will also call that as a long if we get those inside bars. Like I said with the trade scanner, you only take one trade. If it calls 3 coins long or short, or even Forex pairs, it calls a bunch of them going one way, it's all the same trade. You only take one. And I would suggest if you're new or if you want to trade like a trade of the week, trade it on paper. See how it goes on paper. I always highly recommend that first. All right, you guys. So if you guys have any questions, you can come to the Discord community. We have a community chat channel there. It's open. When we have our moderators available, you're welcome to come, ask questions, share ideas, observations. and all that. And people are happy to answer and help. We have a lot of things on the way. If you have any questions for me, you can send me a private message in the community. I don't reach out to people actively. So if anyone comes at you and claims to be me, most likely it's an impersonator. I even made a channel for you to report those people in the chat. Okay. Just want to put that out there. Just wondering, is it easy thing to pull some trick with BTC again by releasing fake news? Well, if you're referring to manipulation, sure, there's always ways to, move things a certain way, but I wouldn't say it's a trick. I mean, they come out with fake news, they create some kind of squeeze or whatever. Keep in mind, these markets like Bitcoin are not highly regulated. There's some regulation, but they can get away with some things. Either way, no matter what it is, you have to look at, if it's a fake and that's fake news, right, that they came out with, and it caused this reaction, then chances are it's going to give us the bearish scenario. But if it doesn't give us the bearish scenario, that means there is some strength in here somewhere. Look at the price for what the price is telling us. Don't get caught up in what people are telling us. Price is where the truth is. Price is where reality is, right? But when we look at a chart, we're looking at price in history, right? We're looking at old information, and we have to basically use previous behaviors to assign a probability to a future scenario, right? And sometimes, again, we're dealing with a random situation most of the time, okay? Most of the time, it's random. So there are going to be certain levels that carry a greater probability than other levels, and those are the ones you really want to focus on if you want to be effective. Otherwise, this is just all gambling. All right. I have a whole conspiracy theory on that. I'm not going to share that now because I'll be here for hours. But the point is, this game pretty much is shaped in such a way that you're gambling and you're just wasting your time most of the time, especially if you're sitting in front of a computer and you're just placing orders based on logic and based on feelings or based on some useless oscillator that's giving you random buy and sell signals. You have to have a system, like I wrote in my article. You have to have a rules-based system, and you should have the ability to apply context to that system. Having the system helps you separate yourself from your emotions. That's what the system does. But the system itself may not have a high degree of accuracy. It may only be 50%, but it's these other things that you build into the system, the other rules that help you come out ahead. Without that system, you're just gambling. Okay, you might as well play with a slot machine. It's the same thing. Right? It's like believing a slot machine is a way to make money professionally, which, is laughable, right? Well, this is the same idea. You have to have a system, and you have to have some sort of way to judge that system within context. That's what gives you the ability to say, okay, I like this signal, but I don't like this one, right? And I've seen that many times. With my trade scanner, I can tell people this is probably a low probability signal compared to this one based on where it's making the calls, based on the location. The robot can't see what we can see. So when you combine the two, right, you combine what you can see with what the robot sees, that's a very powerful combination. All right, anyway, I'll talk more about that some other time. All right, you guys, so thanks again for sticking around and listening to this whole thing. You know where to find me if you have any questions. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.